Please welcome with me Jonas Gross from the Digital Euro Association, and he will be speaking on the digital euro from a geopolitical perspective and will Europe lag behind?
Okay, perfect. Just get this. Nee, ich laufe. Okay, so yeah, thank you very much, Marcel, for the very nice introduction. It's now my third time here at the Crypto Assets Conference, and I'm very happy to be back in person. And the topic of my keynote today will be on the geopolitical perspective, because I think recent weeks, unfortunately, have seen which power geopolitics has and also which role money plays in the setup. And here, the digital euro also plays a significant role. Today, if I refer to the term digital euro, and I have to be very clear on that, I do not just refer to CBDCs, so I'm really following a broader perspective. So here for me, the digital euro is kind of includes both like CBDCs, but also other innovative forms of money such as stablecoins, right? Because they are also a form of the digital euro, and even bank deposits are in theory like digital euro, you know, and this is very often also misleading. So today in the presentation, it will be about all these solutions, and I will differentiate between them. So CBDC, stablecoins, but also payments that will be linked via the trigger solution that Martin Diehl just presented in his presentation. So what we do see is that money has a really immense geopolitical component, right? So how far currencies are spread across regions, which currencies are used in which countries, has a really important dimension and impact also on how our country is seen and how important this country is seen in this worldwide community, let's say. And what we see today is that the dollar is some kind of the reserve or the benchmark currency here, and is like seen as the undisputed world's reserve currency. And to give you some number on this, we see that according to ECB data, approximately 60% of global debt and 55% of global loans are currently denominated in US dollars, right? So it's really the safe haven in terms of fiat. I mean, you can debate this coming from the crypto side, but in terms of fiat, that is perceived as the safe haven, and most of the international transactions are conducted with US dollars. But what we also have seen is that this shouldn't be taken for granted, right? And had also not been the case forever. So if we look back into history, so actually the last 600 years, we see that different currencies have played like the role of being the global anchor, the global reserve currency. So going back to currencies from Portugal, Spain, Netherlands, France, Britain, the USA. So of course, depending how you define a reserve currency, and it's definitely not that easy, like not a 0-1 game, you know, but what you see here is what these major currencies and anchors have basically been. And what I basically want you to take from this slide is a few things. First, we shouldn't take for granted that this is the US dollar, so it can be other currencies as well, and they are definitely very, very important factors driving this debate, right? And we very often hear from the Chinese context that the Chinese CBDC will now change everything, and China will be like the currency will be more important than US dollars. I mean, maybe who knows in a few decades, but what we also see is not just about having a digital currency, it's about trust, it's about politics, about economic circumstances, you know, so there's really more factors driving this. But what we also see just from a statistical perspective is that on average between 80 and 130 years, this kind of dominance held of these different forms, so who knows basically what's next here. And the question, and this is also one of the key questions of the keynote, is what does digital currencies play for a role in this context, right? Because as I said, being a global benchmark reserve currency is not just about trust, it's about economic stability, politics, but it's also about transaction costs. I think here digital currencies are coming into play and can indeed affect this current, let's say, currency competition. Why? Because what we see today, if we look in some countries for export businesses, that lots of transactions are still conducted with cash, right? So I know it's getting less and less, but you still have the cases where you bring cash like via the plane, via the car, you know, to another country. So it's not the benchmark, of course, but it still happens. And if you just have, assume you have another form of like digital central bank money, where you can just click pay with your smartphone, with your laptop, and don't bring the money physically, this also means that you have lower costs, right? For storing this money, for bringing, transporting this money, maybe for insurance. So transaction costs could be lower here. Secondly, and this is the comparison to bank deposits, is that for foreign entities, if you are an exporter, it's not that easy to open a bank account in the foreign country, right? So maybe some of you tried it. In most countries, you need to be like tax resident or have to have a subsidy from a company side. So it's really not that easy to access this foreign currency. But again here, if you have a digital currency, which could be a CBDC or a stablecoin as well, of course also depending on regulation, to be honest, it's not just about this. But in theory, you could open up an account very easy and could also transact very easy, right? And this would then mean that transaction costs for this currency would be lower. And I'm quite sure that there are some trading partners, for example, in developing and emerging economies, which are kind of indifferent between using the one currency and the other. And if there is like a digital currency here, which provides these benefits, that they would switch, okay? So I don't expect that every exporting company would switch and that one new currency would be number one again, but it's an ongoing process, and I think it definitely will have an impact. But what's a necessary condition here, and I really want to stress this because this is often missed in the debate, is of course that foreigners must have access to this digital currency, right? Because currently most currencies, at least from a central bank digital currency perspective, are mainly seen as a national or also operationalized as a national means of payment. So foreigners don't have access to it. Then obviously it doesn't matter for the global currency dominance, right? So I want to be very clear here, but the potential, of course, is definitely here. Next, I would like to differentiate between the use cases of different forms of the digital euro. So bringing now the digital euro in. And here on the left-hand side, we see the different versions of the euro and also adding like physical cash, obviously. And what we see today, and this is interesting because it fits pretty well with what Martin Diehl just said, is that physical cash today is mainly used for payments, right? You go to the restaurant, you go to the grocery store, but it's not used for heavy industrialized payments because it's physical, right? You have to bring it, you have to transport it. And it's also like some part, as I said, bringing the plane example where you ship the money in the plane, it's also used for international payments partly, but here, interestingly, without KYC, right? So this is a key feature of cash today. It's really anonymous, at least until specific monetary thresholds. But if I just hand over cash to you, it's not visible the transaction details for the banks or central banks, right? So this is why cash is here way more private. When we look into bank deposits, and that's like a difference, as you see, is that bank deposits are basically in the second row are used for retail payments. Obviously, you can buy with it in the grocery store, send money with it, but also for the industry, right? So B2B businesses, for the capital market. So if payments between banks or other financial institutions are conducted, not in central bank money, then in commercial bank money. And also, obviously, you can use commercial bank money to send internationally. I mean, we know provider like PayPal, where you in the background move bank deposits. But here, the difference to cash, you have to identify yourself, right? So KYC is conducted and privacy is lower. And if we now turn to the digital forms of money, so CBDC, then trigger solution, linked payments, and stablecoins, we also see different use cases. And this is for me really important to differentiate between very often from some people I hear like, I don't know, crypto and stablecoins will like, I mean, if we have a CBDC, it kills everything, you know? From an adoption perspective, of course, we also have the other extremum that just nobody will use it. I mean, we will debate it later on, right? But I want to stress that there are different use cases for these solutions. And this is also quite aligned with what Martin Diehl just said, namely that a CBDC is mainly, has the similar use case to bank deposits, like being used as for retail and merchant payments, being probably legal tender, that it can be used for, or could be used for industrialized payments and capital market payments, which would be more the wholesale CBDC dimension, and also for international payments. But here again, what I presented last year is that in theory it's possible to design a CBDC as private as cash, But currently reading between the lines, it seems like that there will be some form of KYC, right? Because AML, CFT compliance is very important. So it might be more realistic that privacy is not possible, or payments are not possible without KYC. When we look at the trigger solution, we see, and I think Martin Deal really well motivated this, so I don't need to elaborate on this in detail, but we see that this is more about the industry and the capital markets, right? So that a blockchain, a DLT as a technological basis is kind of increasing more and more in importance, is used more and more, and that smart contracts can really provide benefits for the industry. We will discuss use cases later on, and also for the capital markets, right? So this is where I personally would see the trigger solution as a viable solution. And lastly, when we turn to stablecoins, it's probably, again, similar to cash, at least from my interpretation, because it will be and currently is used for retail and merchant payments. So when we think about some providers like Visa and MasterCard, they currently play around with using the stablecoins for their clients, also for payments, because the demand is increasing. Obviously, it's just some cases, but it's increasing in importance. And stablecoins are also used for cross-border payments, right? So when you think about remittances, and this was initially the DM Libra use case to use these payments for remittances. And when we look into developing and emerging economies, we do see that this is indeed the case, right? So still on a low level, of course, but it is a very dynamic development. And here for stablecoins, it's interesting that in theory, stablecoins can also be transacted without a KYC, right? So mainly more on a pseudonymous basis. But of course, here we have to see how this changes with this unhosted wallet debate, right? And with this regulation which is upcoming. But from the potential, it's definitely there and can be used in such a setup. So what I really want you to take from this is that there are different forms of the digital euro if you define it in a broad sense, and that there is also, there's different use cases for that we will discuss later on. And I think there is place for all of them. So not one solution will kill the others. It's really kind of a coexistence. And now, as the topic is more focused on a geopolitical dimension, let's turn to the currently, let's say, three major currencies, namely the euro, the dollar, and the Chinese yuan. And let's take a closer look how they kind of use this new form of digital money. And if we look into the CBDC space, we do see that currently the ECB has started a project around the digital euro, and which is, again, as we said or if you've seen in the slide before, mainly for retail use cases, also as Martin Deal said, a retail CBDC, and could become live in 2026. At least this is also what Christine Lagarde indicated last year. So this is not a solution that will become built here in the next 1 or 2 years. But in 2026, and here the focus seems to be retail and merchant payments. So basically that you can go to the store, you can pay with the digital euro, and not the international dimension. And this is really interesting because I just mentioned before that a digital currency can have the potential to improve the role of the euro, and the ECB also writes in this digital euro report that this could be a benefit of the digital euro. But the ECB also writes in this report that basically they don't want to give foreigners unlimited access to the digital euro and don't want to affect capital flows and exchange rate, right? Which is kind of contradictory. So you either can strengthen the currency and also which leads to exchange rate movements and capital flows, or you don't, right? But at least as I read and interpret the current publications, I think it's mainly, or it will mainly start as a national or like an European payment solution, mainly used for retail and merchants. When we look at the Federal Reserve, it's, I think from the time perspective, similar to the ECB, but maybe 1 to 2 years behind. I mean, we do see that the dynamics is currently increasing. So with the executive order by Joe Biden, that more and more pressure is coming to also look at a CBDC, but I wouldn't say that they are further than the ECB. But what's currently quite obvious to me is that China obviously is leading here in terms of advanced economies from a time perspective. Because China has been studying the digital yuan for, starting actually in 2014, so 8 years ago. And this year they piloted again at the Winter Olympics. They also have some pilot programs in, I think today there's 11 cities, if I'm not mistaken, and I think there could be a national rollout this year. And here they are currently also in projects with the BIS where they test cross-border payments, right? So this is something tested yet, I think not possible for the prototype, but could become reality soon. And this means, and again, this is the assumption that foreigners get access, and we don't know that yet, right? So in their white paper about the CBDC, they write that this can be used for cross-border payments, but the central bank also said it really doesn't want to impact this currency, like currency competition. But I mean, words and deeds are different things, and we just don't know, right? And I think we have seen the recent weeks that, I mean, words and deeds are really two things. But the potential is here if they would allow the digital yuan to be used by foreign companies. I at least personally would think that some exporting companies would basically use this, and meaning that this could also increase the role of the yuan at this perspective. If we look into the trigger solution here, it's quite interesting and great to see that Bundesbank has done lots of work, as Martin D mentioned. So at least as far as I know, Bundesbank and the BIS has done some work, but they seem to be leading in the space. And when we look into stablecoins, we all know from the crypto space that the main party is basically going on in the US. So that if we look in the top 20 stablecoins, probably 15 to 17 are denominated in US dollars. So that this seems to be the currency for stablecoins. And we also see that this trend is kind of accelerating because now also politics in the US has understood the potential of using stablecoins also as a tool to strengthen the dollar, right? So I would expect this trend to continue. But what we also see, and this is, I think, really unfortunate from a European perspective, that there are currently really no major euro stablecoins, right? So if we look again at the top 20 stablecoins, we see, I mean, depending on the date, between rank 19 and 20, the first fiat-backed euro stablecoin, which is, of course, like from a currency, a euro perspective, not really desirable, but I guess also understandable, because this is really related to the negative interest rates we are currently seeing. Because if you are a stablecoin provider and get the funds from your clients and deposit this in government bonds or on your bank account, you pay like negative interest rate from day one. So you basically make a loss, right? And this is why these companies basically have not focused on this one. But of course, it remains to be seen if we get some positive impulses, if we see rising interest rates from the ECB this year or the next time, you know. But for now, it's really no major projects kind of here that had similar size as US dollar ones. So to kind of summarize, I think that from a CBDC perspective, that this is more a medium-term project, that China here is definitely leading the way. And as I said, we don't know yet if foreigners will have unlimited access, partly access for China. It can also be that in the starting, just the nationals do, and afterwards more people get access. We just don't know, right? But the potential is here. So basically, the central bank could say from the day to another, we open up the access here. If this is like another goal, you know, to foster and to improve the kind of position of the own currency. And this uncertainty, of course, also something we have to keep in mind in this whole debate. Turning to stablecoins, as I said, CBDCs, stablecoins are mainly US dollar dominated, so we don't see a lot of them in Europe. As I said, could change with negative interest rates, and could also change because we also see some algorithmic stablecoins, which is a complete different topic here. Yeah, so that's also kind of it. So I think it's just important to consider this geopolitical component, like even more in the view of the current situation we've seen also with Russia, with being countries wanting to force them to use the payment, the currency for the payments. So this is something we could see in the future, potentially also with the Chinese currency, and this would also impact the euro, right? So I think, and we are currently in the investigation phase of the digital euro, that this should at least something be to think about, if this should be a tool to also improve and increase the role of the digital euro or not, but definitely something which should come up in the investigation phase. Right, so that's it from my side. Thank you very much for the attention. Happy to hear your thoughts later on in the discussion as well, and thanks for having me.